I'm trying to. Okay. You got it, Flo?
Yes, I've gotten it. So I think this is the fourth class. So it's a journey, right?
Yeah.
If you look at how we have also drafted the, shall I say, the curriculum or the scheme of work, right? So the first four classes, a lot of discussion, a lot of interaction. And I think that is very important in trading, right?
Yes.
And that's why it's often said in the public space that, you know, what you hear would at some time form an opinion inside of you. And the more it also comes in, it then forms a habit, it forms a character, then of course, it then, you know, just a reflection of whatever information that one had gotten. And that's why, you know, we always speak positively, right? And say positive affirmation, even though the situation is looking not too optimistic. And because trading, oftentimes, you know, people run out of trading. They trade for a while and they then drop off. And sometimes when you are then checking with people, say, oh, well, I lost a lot of money. Man, I think it's a very risky business. I had to drop off. So that's to say that there is, you know, a very important area that we need to focus on. So again, people would not tell you that it's because it was difficult for me to understand, or maybe I didn't learn the skill set, right? They will often tell you that, well, I think that it wasn't meant for me. There were some losses. I just needed to try something different. So at that point, it's difficult to say, oh, maybe this person is not technically sound. That is not the case. It means that there is an Achilles heel somewhere. And that's why we've taken our time to look at risk management, trading plan. That was the first topic. And that is very important. You know, it's something that one can say, well, I understand it, it's something that I do. But the more one receives a lot of communication, even, for example, for those who are Christian, they will say that faith comes by hearing and hearing by the word of God, right? So the more you listen to words of exhortation, the more your faith is strengthened. So the more you listen to, for example, risk management, trade management, it just resonates in your mind and it makes you very conscious, right? It's not something that is one-off and you then forget. So it was deliberate that was started that way. And the second topic we then looked at, you know, trading plan, because you can have the grace to know how to manage your risk. Maybe you're a very conservative person. So personal attributes, naturally that can flow. And because you're also very careful, very cautious person, you're very prudent, perhaps when your trade is in profit, you quickly move it to break even. So you hardly lose money, but you may be taken out marginally in profit. So your natural self may be helping you. So that's why we then went further to look at trading plan. Because even though you can manage risk, if you don't have a well-defined plan, it's like one is planning to fail. And, you know, you can rise, go very high, and you then fall. And definitely you'll be obeying the third law of Newton, right? Which says that, no, that one, anything that goes up must come down. That's the law of gravity. So not the law, not the Newton third law. The third law is talking about action and reaction, right? So this one is basically the law of gravity. Anything that goes up will come down. So with that consciousness in our mind, it means that you can be in a trade and you will see a lot of money. You can feel that you want to go higher, but perhaps maybe you just be too ambitious, right? You start coming down, you lose your money. But if you get to a particular point and you make money, you close your trade, you are good. It just gives you a lot of joy that you have won a trade, regardless of the amount, right? But winning is winning. People tell you that my win rate is 90%, 95%. But it is immaterial whether the risk reward is 1 to 5, meaning that if they are risking 10 pips, they must make a minimum of 50 pips. Or maybe when they are risking 20 pips, they'll make 100 pips. No. Whether it's 1:1, meaning that they are risking 20 pips and they make 20 pips, they leave the market, is that they have won the trade and they tell you this is the win rate. Then, of course, there are devils in the details, right? So it all depends on that. Why trading plan very important. That's why we said you can make a target even in terms of pips or in terms of monetary value. It could look very insignificant, right? But what is important is that either you know that, oh, I make $5 every day, whether it's $20 every day. This month, perhaps you can have, if you are trading Monday to Friday, you will have 20 trading days. 20 times $20, that is about $400, right? Again, $400, you know, in our head, depending on our financial capacity, could be maybe not too significant money for us. But just imagine, what is my living expense? What can $400 do for me, right? Which is like a passive income, right? This can differ XYZ. If you are in the Nigerian context, $400, let's say you take a exchange rate of less than 900, even come back to even 800. Let's even go to, let's say it's even 800. That's about 320,000. I think that anybody who earns 320,000 in Nigeria, they would say that that person is a middle class, right? And he's doing well. So that's what tell you, you know, so that $20 looks very small, depending on our appetite. But again, it was important that we emphasize that trading plan, very important. I think the last class we had, we're just looking at the funded account and some nuances in the funded account for us not to get an email that says hard breach detected, right? What we need to do. And again, and that's to tell you that the space that we play in is also a risky space. For example, you may have noticed, I think your funded account, is it from MFF?
No, my funded account is 8cap. I think that's the name of it. 8cap.
A Capital or what?
I'm sorry, what'd you say?
What's the name again? I didn't pick that.
8cap.
A-cap, okay.
8cap.
Okay, so for example, I know I trade with my forex funds. I know I looked at my MT4 and I was I saw some setup and I had some pending order. I was just wondering, how come this thing has not picked, right? I had to refresh. Then I checked the other account I'm using to trade, which is my direct fund. And I saw that it was working. So it wasn't a network problem. So that also prompted me to do a check. And I went to the website and I saw that, you know, the account had been frozen, right? So there was then a message to all the subscribers to say that they're having a bit of issue in the US and also in Canada. The account had been frozen. They're not able to draw down from the account. And the first hearing will be September 11, which is more than 10 days from now. And you don't know what will be the outcome, whether the account will be unfrozen, right? So you see that there's a risk, right? And that's why, you know, the last time that I had a conversation on this call, I was saying that when we are trading, regardless of the profit, at the end of the month, whether you want to do it weekly, you should be able to withdraw some funds from your account because this is not like a bank account, right?
Right.
So you can't just leave profit in the table because if something goes wrong, typically you may not even have a physical office to go and lay a complaint, right? Just like you have bank that you go and say, oh, my account, and the bank is there, there's a bit of security around it. But trading, because a lot of these things are done virtually, we as traders, we also need to be aware of what is the risks in this space, right? And so that we don't also, just over-rely on either a broker or a prop firm, right? So again, that is just, a kind of revolution that came out. But again, perhaps they will sort themselves and come back. But even when they are back, you see that a lot of persons will be trying to do withdrawal, right? Especially those who have traded and have made profits. Because there will be a lot of skepticism in the mind of their members. But again, the risk is there. And that's why we also need to pay attention to the environment. Either on a monthly basis, we try and draw down so that over time, you know that what you even have with your broker will be money that you've already made off them, right? So it's like a risk-free kind of trading. All right, so today's class, I know by next week we'll then be going into a lot of those topics will be around charts, there's smart money concepts, there's understanding imbalance, how to pull value pullback, how to entry and all those stuff, right? So in terms of, so today is basically trading psychology, right? It sounds very, very simple, but not too simple, right? Because trading psychology is so important. If one is not careful, you will trade and you not make money. You will trade and you not make money. Once you can see my screen, just let me know.
Yeah, I see it.
Okay, so you know that a lot of those things that we say on this call, they are basically maybe personal experience. These are not theory, right? Because we are traders, right? We see these things, and we know because of the human nature, some of the mistakes that sometimes we also make. For example, there's a small account I have, and I will tell myself, if I trade on this account and it gets to $10, because the fund there, let's say it's even less than, sometimes it could be less than $60, right? And when I trade and it's $10, right? Sometimes I see it at $8, The obvious thing is for you to close that trade, because if you look at it, that is more than 10% of your principal, which is also okay, right? And sometimes you could say, oh, because it's a good trade, you leave it. And the next time that momentum drops, you know that the market moves in a certain way, right? We are aware. Sometimes you enter a trade. If the market wants to move, within an hour, you can get your TP, right? So that one is different. Sometimes volatility will just be at the opening of a new trading session, whether the New York session or the intersect between London session and the New York session. And the price will just move very fast. If you don't close your trade at that time, maybe you feel that, no, it's supposed to give you 200 pips, 100 pips, and you had done 50 pips, you're there. It begins to retrace. The time maybe took you 15 minutes to do 50 pips, but you wanted to stay and do 100 pips, and it begins to retrace. If it goes back to your entry, it can do another more than 4 hours to even give you the 50 pips that I gave to you within 15 minutes initially. I don't know if you have experienced that kind of scenario before. Yeah. So sometimes the market just moves, and that's why we know when to close significant part of our account, or even close the trade and say you are done. And that's why I talked about having the money target. Because when I make up to this amount, regardless of whether it's getting to my TP or not, I'm going to exit this trade. So that's very important. So I give you a scenario. So there are some of those forex pairs that may not move very fast, right? So I'd looked at a chart in the morning, that's CAD CHF. And I saw that it had gotten to, I trade 4 hours, 15-minute strategy, right? So, and I saw that it had gotten to the 4-hour POI. And I looked at it, that also the first confirmation is that they're taking the first pullback in 15 minutes. So I was waiting for the entry. So because the stop loss is just basically 12 pips, I think I had to adjust it to about 15 pips. Now, and I think the take profit was about 60 pips or thereabout, more than 60 pips. Now, I opened the first position because the account size, before that trade, the account balance on the account I wanted to trade was about $40-something, right? So I entered the position with 0.05, the first position, the pending order, right? I was waiting for the retracement. Then because it may not retrace, then I entered just to, in case, to also manage the human nature impatience, right? So that there's a way you must have a control. Some of those things we explain, there's a way you can control. Sometimes, oh, you want to miss the trade. The human nature can be telling you to miss the trade. So where I saw the trade, I'd enter with 0.01, right? Very, very insignificant. Just, okay, you're in the trade already, right? Then wait for the main trade. Then when it peaked, then because I'd entered with this 0.01, the balance was 0.04, right? So I'd entered. I think I was somewhere. I saw that it had peaked the trade. That was at about 1 p.m. When the market opened, right? I was even, as a matter of fact, I was even driving home, right? So it peaked 1:30. And, there was a lot of, I think there was news, I didn't even check. 1:30, it was a sell. The trade moved very fast, about 40 pips. So when I looked at, I was even driving, I was just in the traffic light, so I was waiting for it. So I just checked my phone, I saw that the three entries had done about $32, right? So average about 40 pips. Do you know, I didn't bother to say, let me do patch. I closed all the trades, right? Because I had almost doubled the capital, right? About 40, I think it was $45 or something. Then there was a $32 profit. There was no need for me to say I want to manage anything, right? I closed it. When I got home, it was still selling, but it then retraced. Because I looked at it before this meeting, this engagement we're having. It then retraced, right? I know it's going to go back and go to the take profit. But that human emotion, when you have seen about $32, if I'd head onto that trade, maybe by night to be like less than maybe $10 or something like that. And there will be a regret in me, right? So why didn't I close it initially? So that's how trading is, right? The human nature also wants to get a bit of praise, right? And I, from that time I closed it to this very time, I felt very good, right? Because this is more than 70% of the principal. So that's how it is, right? So it's important that we understand this. So imagine that I take on that trade, maybe just about 5 of those within this month. So that would be, that's more than $100. So if you do about 3 times your capital, I think it's a good, you say you've done well, right? And that is the kind of appreciation we also need to give to ourselves when we are trading. Because when we say, okay, before we say that we'll make this amount, it means that our capital will also support it. So for example, I can't be saying that I have an account that is less than $50, and I say I want to make $1,000 in 1 month. Most likely, I'm going to blow that account even before the first week of the month, right? So it is very important that some of those things we just allow them to just stay in our hearts. All right, so let's go into it. The next 38 minutes or thereabout that we have. So trading psychology. I know there's a bit of, should I say that some of those things we have said, some of them will come in, but there are some that will just be new, right? Because it's risk management, trading plan, and all those sometimes they could be interwoven, right? And they then have their specific direction. So again, we were looking at introduction to trading psychology. What is trading psychology? Emotions and trading, building a strong trading mindset, and strategies for managing emotions. So these are, very important. So just like this use case I gave, imagine that trade that was about $32, I held on to it, and eventually it dropped to about $5. Let's say out of frustration, I then close it. I'll be looking for a trade. Oh, let me try and even make back my money. Let me try and make back $27 back, right? So that is, the emotion that will come in. If I'm not so disciplined to say, you know what, let me allow it go, let me wait till Monday, right? And see if I get a different setup. So we don't want to create an opportunity for our human self, to take control over our emotion, take over our decision making. Because at that time, the decisions that you make may not be accurate. Just like somebody who just enters a trade and, the outcome is a stop loss, if you're not careful, you even go and get a re-entry. You'll not go and reanalyze that pair. You enter again and say, no, this is a better position for me to enter. You enter again, it hits your stop loss. If you're not careful, you also go and enter again, right? So that's how the human nature works, right? So number one is that, what can we do? We need to understand that limitation of our human self and then say, this is what I need to do. That is the response to that weakness. Not that, hey, it will not happen. It's not possible. Even on the tutor side, no matter how experienced you are in trading, because you are a human being, you are not immune to it, right? It's just that you don't have an antidote. You say, when this kind of situation comes in, when you feel that impatience is setting in, it's telling you to enter a trade before your entry, what you do is that obey, but enter with a very insignificant lot size in comparison with your account size, right? So at that point, you are not missing out. That fear of missing out, the FOMO syndrome is gone. You are in the trade, but you have managed it, right? In terms of risk management and in terms of your control over self. All right, so we look at the introduction to trading psychology, right? So that is, trading psychology about mindset, right? And that's why you see some persons, they do a lot of positive affirmation and say, even though things are not going well, they say it is well. Even though they are sick, they say I'm strong. Even though they are not feeling too excited on the morning, they say, no, today I'm going to be favored. Today I'm going to get it right. It is important, right? Because you are trying to align your mind with your desires, right? So, and it's very important. Somebody who says, oh, well, today looks like a bad day. Eventually, it will just end up being a bad day, because anything that then resembles bad, you accept it because you say, after all, I already knew that today will be bad, right? So mindset is very important, right? Before somebody begins to make money, you must assume that stage from your mind first. It's when you assume that position, you then see it, manifesting in the physical realm. Because if your mind has not accepted that wealth, most likely it won't come, right? So mastering trading psychology it's the key, right? For we traders is the key. That is controlling ourselves, right? Having the right mindset, right? Because if you have the best of skill and you are not disciplined, you are impatient, greed is there, and you want to revenge, I want to take it back. The market has hit my stop, I want to take it back. If that is one's attributes, trading may be a very costly business for such a person. Very costly, So it's important that we note that having control over our mindset is a prerequisite for our trading success. So basically, trading psychology is, For us, it's very critical, right? For us to make profit from the market. Our mindset, we need to work on our mindset. Very, very important. We need to know that this my strategy will work. The only thing that is making it not to work for me, perhaps I'm not applying it the right way, right? I need to review it. So trust is also very important. You can't be doing something you don't believe in. If you know that this strategy does not work for you, change it. There's no point messing up with your mind, right? So now, what is trading psychology in itself? What are we talking about, right? So trading psychology is the study of the mental and emotional aspects of a trader that influence what? Decision making, right? So it's about ourselves. So what are those things that would influence your decision making? So, and that was why I was even talking about what do we listen to, what do we believe? It begins from there. So imagine, just bring it out in terms of our relationship with one another. If somebody comes and says that Mr. A gives you a lot of negative information about Mr. A, even though you haven't had any relationship with Mr. A or Mrs. B, you have already formed an opinion based on the information that you have, and you can start, you could be very cool in terms of the relationship you have with Mr. A when you're having an interaction. Sometimes you'll be having an interaction and I say, but this person is quite different from how this other person had painted him or her, right? And, sometimes if it's a good information, you're very excited, meeting that person or having a conversation with that person because there were a lot of testimonials, right, from people who know that person. So it's about, and it's going to influence how you relate with the person, your decision making, your trust level, your confidence level, and your openness, right, to that person. And that's what trading psychology is about, right? It's, our entirety, our personality, our temperament, everything. So we then need to understand ourselves. It's not about, Paul trades this way, Juliet trades this way, Peter trades this way. I may be doing that, and that is in alignment with my temperament and my emotion. That may not necessarily work for you. It's about you then doing that works for you. So, and that's why this is also very important, right? We'll then say, hello, trader, know thyself, right? We need to know ourselves. All traders have different personality. This is very key. Different personality. And it is very important that we know what works for us. You need to know what works for you. I need to know what works for me. For example, a fearful person may want to adopt scalping strategy. Just make 20 pips, 30 pips, you're off the market. Because you don't want something that will mess up with your emotions, right? Again, somebody who is very, very patient, has a very good shock absorbing capacity, can say, I want to hold trade for 1 week, 1 month, 1 year, but that may not be your style, right? Why do you want to go through that emotional torture? Why do you want to trade that way? So you must understand that what works for you may not be working for me. And there's no bad strategy and there's no good strategy. What is good is what makes money for you. What is bad is what is costing you money. So you can't have something that is not profitable to you and it says my strategy, no, right? So common psychological challenges as human beings, there are a lot of battles that we fight. Even sometimes aside trading, in our normal life, maybe you are expecting that God does something for you. There's this mind that will be telling you, it's not possible. Try to put fear in you, doubt in you. So it's a battle. It all depends on how do you deflate that, right? Do you just allow, do you just succumb to it? Do you just feel that, it's myself, it's my nature, right? So fear is something that, we need to work on. So once you have a strategy, why are you afraid? Enter the trade, just have a stop loss, right? There's no need for us to be afraid. You just need to have a stop loss. And don't, greed is also a problem. You just want to make everything from the market. Oh, Mr. Hay had given a testimonial that he makes about $10,000 trading the foreign exchange account, the forex market. $10,000. I'll say, oh, that is good. I want to make that money. But you don't also know what is the account balance of Mr. A. Maybe I've not even told you, right? You don't know the lot size they're using to trade. And you feel that you are not making money. And that Mr. A, perhaps, maybe is trading with a standard lot. And that standard lot, when he's already 10 pips in profit, is already $100, right? Because $1 would then be, again, for a normal forex pair, that's 10. 1 pip is $10. So 10 pips already $100. If it's 20 pips, it's $200. And you are trading with, let's say, 0.05. And your ambition is the same as the person who is trading with a standard lot. When one entry that he has is equal to about 5 of your entries. Just 1 minute.
Oh, did we lose him?
Yeah, so just, I think, so, one needs to be mindful of that, right? Before we do a comparison, you need to understand what is the lot size of that person, what is the account balance. And that's why the common point that we meet is basically saying, how many pips did you make, right? It's not necessarily how much did you make, right? So that's how we check. We check ourselves in trading. For example, if you come and tell me that you made $100, right, today, I may not be too excited to say you made $100, right? Because maybe I made $10. So I don't want to feel bad. What I would say is that how many pip did you make that gave you $100? Maybe you are trading US 30. And you have even traded it with one standard lot, for example. And maybe if you are using the broker that you are using, where 1 pip movement is with a standard lot will be $100, right? Because on your side, 0.1 gives you $10, right? So meaning that if somebody is using a standard lot, 1 pip movement is $100. So let's say that is what the person is trading, and just 1 pip is $100, it closes the trade. And then says, oh, I made $100 today. And maybe on my side, I made, let's say, $5, and I'm angry with myself. But if I ask him, how many pip did you make? I'll now realize that he made just 1 pip. And maybe my $5 was 50 pips. So in terms of trading understanding, I'm a trader, right? The person who made 50 pips, because that is what trading is about. Meaning that I've entered a valid trade. But if I just enter a pair and I look at how it is, if it's just 1 pip I need, as a matter of fact, the spread most times is more than the 1 pip, right? So when I enter the trade, as I'm looking at it, I'm off, right? So that's not trading. So we need to understand this thing so that we don't put ourselves under unnecessary pressure. Okay, so we're talking about emotions and trading. So so fear, we cannot just have a strategy, right? Don't over leverage. That is the antidote anyways. I was talking about, how do our response to some of those limitations that we have as human beings. For fear, for example, sorry, just 1 minute. Somebody is trying to call me. I think it's right here.
Okay.
Apologies for the break in transmission. So Can you hear me now?
I can.
Okay. So just like when we say fear now, what will be our response to fear? Because fear will be there, regardless of how experienced you are, right? Before the trade gives you the outcome, there's this element of fear, right? Because you don't want to lose money, right? Even though there's a stop loss. So what will be our response? What do you think that we can, because that fear exists. Everybody, there's nobody who is not afraid. Or is there anybody that will not have an element of fear? So what will be our response to this for us to be able to overcome fear? Is that we'll not over leverage. Is that correct?
Mm-hmm.
Is that correct?
Mm-hmm.
So if we don't over leverage, it means that we have overcome fear. Not that the fear does not exist, but we'll have a way of overcoming it, right? Which is that I use a lot size. I've already made up my mind that it's $10 that will leave my account if it is my stop loss. But if I win this trade, it's going to give me $30. So I'm good. I don't need to disturb myself. But when you've gone to enter with a lot size that your account cannot take, you are looking at it, hey, it is going, it's going, Even before you hit your stop loss, you go and close your trade. So we need to know that some of these things exist, but what is our response to it? So that is the one that is very important. So this is that, we want to grab everything. Is it, we just want to make all the money. And so I also need to have a realistic opinion about trading, right? I know in the past, we have different narrative, some persons, because they also collect money from people to trade for them. They try to create a different personality to show that, there's a lot of money I make, I go on vacation, I do X, Y, Z. Just create that virtual image so that you're able to also bring a lot of people to develop trust, right? So, but again, we need to be realistic to say trading is a business. The fact that you are a forex trader does not just exclude you from the society. It's a job. Just the way you go to work and you earn, if you don't do well, you are sacked by the employer, right? If you also do not behave yourself in the trading market, you will lose your money. So it's that kind of mindset, right? So it's not something that you just want to pick everything. Somebody has been trading for the past 15 years. And today is telling you that it's making, let's say, $2,000 within 1 week or within a day. We don't know his account size. And we just feel that, yes, we want to make that kind of money. If this person is making it, why won't I make it? But this guy has put in 15 years trading. But you are just maybe 3 months into trading, 6 months into trading. Would that be a good approach? No. Because the person did not just get there in 1 day. It's a process, right? And we need to understand this.
Yes.
So this part, it talks about, frustration and impatience. Because number one, this is where it comes in, one begets the other. Greed. Because you want to grab everything. You are setting unrealistic expectation. Then the market reverses against you and you lose your profit, lose your capital. Then you will be so impatient and say you want to revenge. I want to go back. You are frustrated. You want to bring back your money. You want to make back the money. And you then make a lot of losses, right? But we need to understand that in the forex market, anything can happen. We do not have control over it. We do not have control. And that's why we have stop loss, right? And we have lot size. You don't have control. So greed can beget frustration. And, that becomes a problem because it's going to make us very unease and it just make us lose a lot of money. So anytime we don't have stability, we're not in the right frame of mind. Somebody who are just like somebody that is bereaved, you know, at that point you are now discussing strategy with that person. His mindset is not in the right frame of mind, right? Sometimes you're having a conversation with somebody saying, "No, can we defer this engagement? I'm not in my right frame to be able to listen to you." So that's how it is. When you've lost a lot of money, at that time, you could be very edgy. You can even transfer aggression. Somebody can be having a discussion with you and you just pick it because it's a transfer of aggression. That is human nature. So we need to ensure that trading does not cause us, does not even cause indirect harm in our relationship with other people. So we need to ensure that there's stability in our trading style, right? So that frustration does not come in. Okay, so this is very important, right? So Murphy's law is, what is it talking about, right? When I say, oh, Murphy's law, what is it talking about? What is saying basically is anything that can go wrong, will go wrong.
Mm-hmm.
So, how does it apply to our trading life? So it means that there's probability that the trade can go against us, right? It means that since that probability exists, one day it's going to go against us, right? So that's what the Murphy's law is saying, that anything that can go wrong will go wrong. So even though we're entering trade, we're making money, but the fact that we are trading with a stop loss, it means that one day our stop loss will be hit, right? So we then need to prepare. So we can't say, oh, because I've entered 5 trades, this my strategy is top notch. And maybe you were testing that strategy with a 0.05. That's what you were trading. But you've entered 5 trades and you let me use the word, you cashed out. You made a lot of money. By the 6th trade, you say, wow, this my strategy is standard. Let me even trade with a standard lot of 1 because now I have complete trust in this strategy. And that time you're entering that, so that's when your stop loss is tested and you may lose everything. And you'll be so frustrated and so disappointed. Because imagine, the kind of analysis you did before you got those 5 trades. So in one day, the castle that you've been building the last 2 months through your 5 trades, just one tsunami just came and brought it down, right? So we need to understand that anything that can go wrong will go wrong. So what is that thing that can go wrong in trading? Your stop loss can be hit. And that's why the fact that you have a stop loss, the fact that you have a take profit, it means that one day if you hold on to a trade, it's going to eat your take profit, correct? It also means that one day your stop loss will be hit. So that's what Murphy's law is saying, that the fact that we know that somebody is going to die, right? We can pray against that, but it's going to happen one day, right? Because anything that can go wrong will go wrong, provided it is there, it exists. So that's how it is. If we, in our trading life, there's a take profit. What are the things? There's a take profit, there's a stop loss. No matter how experienced you are, you would experience both.
Mm-hmm.
It's your control, which is the risk management, right? And your experience that will make you not to be in deep loss, right? You then be net positive. But you can't say, oh, I'm here to testify that for the last 10 years that I've been trading, my stop loss has not been hit. That testimony, there'll be a lot of investigation. Because when we investigate, maybe you are even trading with a stop loss of 500 pips. So you hold the trade until the trade goes, break structure, will come back to you again. And you then say that you are not losing a trade. Because it's unrealistic for you to say that, no, I've traded, my stop loss has not been hit for the past 3 months, the past 6 months. Again, it could be that you are not trading with a stop loss, right? So you just enter trade with different small lot sizes and leave them. Then at the end of the day, you put a lot of pending order. Then at night, you then check how many of this my trade picked, how many of them did your net position. So some will be negative, some will be positive, but because you are also an experienced trader, those your entries will be good entries. So your net position will be net positive, so you close everything. So if you trade that way, you know, you can come and say you've not lost any trade, right? That is, you've not been net positive, not that you've not lost a trade. I hope you got the context, right? Did you get that analogy?
Yes.
Yeah, so it's not that the person has not lost a trade, it's just that it's always net positive, and that's because of the trading style, right? So it's important that, you know, sometimes we interrogate some of those feedbacks that we receive, because what they do also, they can create a very ideal mindset in us, and it's not possible. Trading comes with its own risk. You know, no matter how experienced you are, you would experience every other side of trading. Whether it's that you are trading a funded account, you will blow it. Sometimes you will not be asking, why would I blow a funded account? Why? Is it? It is, you know, it's not about experience. It's just a human psychology, right? There's a kind of false opinion that your mind just gives to you, because it just gave you a 50,000. It's no, let me trade with even 5.5 lot size, you know. Before you know it, you get a mail and say hard breach detected, you know. So so those scenarios are there. But the most important thing is that we are aware of the risk, we are aware of those limitations. Then what do we do? Right? What do we do? So it is important that at the end of the month, we say, for example, this is the first day of September. Another trading month has started. The last month, we look at ourselves at the end of these 30 days, my studies, my review and everything. Did I have maybe $10 as my profit to withdraw? If I didn't have, it doesn't mean that I'm a bad trader. It doesn't mean that trading is not for me. It means that I need to do something different in the month of September, right? To say, okay, every day, if I make $50, for 20 days, that's $1,000. It's better than me not even having anything. If that's my expectation, worst case, if I then factor in some losses, maybe I end up making $600, $500. I'm still very okay, because if you take that withdrawal, there are a lot of, you know, bills that would defray, right? Whether that is enough for our gas, whether it's enough for our beverage, whether it's enough for our cable TV subscription, whether it's data, you know, whether it's even the family outing 1 weekend, 2 weekend, it will do something. And it gives you a bit of joy that, no, this thing I'm using to buy, I'm using to foot this bill, is for my trading. So as a matter of fact, the person that is benefiting from that will be praying that you make a lot of profit, right? So that next time you bring the money to come and enjoy with them, right? So it's important that, you know, we plan ourselves. Little drops of water make a mighty ocean, right? It's gradually. Because when you go through the process, the kind of education, the kind of experience one then gathers, it is better than when you just jump from 0 to 100, right? So again, because you are also a Christian, right? So look at it. When, you know, our first parents, Adam and Eve, right? So what happened? When God made the mother and breathed on it, it became a man, right? It just became a man. And it took rib from him and made Eve. And they were all adults. They didn't go through childhood, right? They just became a full-grown man. What happened? The serpent came, deceived them. And, you know, they said, oh, the woman he gave to me. And the Bible says that man, God even at some point he regretted creating man because the heart of man was just so something else, right? So when he knew, he said he discovered that he made mistake because you cannot breach process. You cannot just jump from 1 to 100. You make mistake, right? Because he just gave birth. Somebody just became a man, and he cannot say this was when I was 1 year old, 2 years old. He just became maybe 30 years old. From 0 to 30, there will be a problem. You would have missed a lot of a growth process. And what then happened when he then corrected that? From the first parent, he saw how it went and the issues that came with it. The next time he was coming to correct that wrong. What happened? Our Lord Jesus Christ came, right? Came through a woman and was born. He was nurtured as a child, and he grew in wisdom and in knowledge under the tutelage of his parent, even though he is God and he was God, right? And even when he appeared to the people in the temple, the elders, when he was speaking, you know, they were so amazed by his experience. And you saw at the age of 32, his earthly ministry, maybe about 33 years had ended. But today we are all experiencing the salvation, right? And I have to tell you that process is very important. You can't, anytime you want to move from 0 to 10, you make mistake.
Yes.
But if you move from 0, 1, 2, 3 to 9, 10, if you make a mistake, it will not be a costly mistake, right? Because just like somebody who jump from, you just press a button, boom, and he goes like maybe 34,000, you know, the altitude above the sea level. If it's coming back, the impact will be very severe, right? But let's say just somebody that is doing normal, oh, higher, you're just jumping, you know, you're not feeling anything, right? So process is very important. I will need to understand this, right? It's that gradual process that builds resilience, you know. It makes us to understand trading very, very well because this is not abracadabra. It's not gambling. It's that this is a strategy that I have used without over leveraging and making my money. You can't, there's nothing you want to tell me. I have experienced it. This is like Thomas saying that I have seen that place here, right? And I believe, right? So it's very important. All right, so what do we need to do, right? To say that, how do we then build a strong trading mindset? We know that if we don't have the right mindset, there'll be a problem. How do we then build a very strong mindset, right? So we just go through it one after the other because that is what will make our trading life very fruitful. That would also make us to succeed, right? It's like the oil that we need. It's like the water that we need to make our, you know, our fruit blossom, right? For us to then reap the reward of our trading and all our effort. Because it's not easy. Mentally, it's not easy. You go to your chat, right? You know, you provide data for yourself. You know, it's a lot of dedication and effort. So we should see the output. All right. Yes. So discipline, very key, right? So let's stick to our trading plan and our trading strategy. Very important. Because the repercussion, the disadvantage of we not doing this is too severe. So let's do it so that, you know, we're happy with ourselves. So patience again is, so we need to be patient, right? If a trade does not align with our strategy, let it go. You'll still have a setup. If it doesn't get to your entry, don't force it, leave it. Because if you force it, it's like you just going to bring problem onto yourself, right? It's not for you. God has not said this one is for you. You know, if you force it, there'll be a problem. Likewise, in your trading life, if this setup is not for you, why do you want to force it? Just allow it. So resilience, right? Regardless of all those things that we've said, whether you have lost trade, whether you have blown account, is that we are looking forward. We're saying that, no, this thing is for me. I'm going to make money. I'm going to even make all my losses. But I'm not going to make it in a hurry. It's a process. Gradually, I'm going to break even. Gradually, I'm going to be net positive. Very important, right? So regardless of the trouble, the orders, we can't give up. So again, this one, we need to embrace it. Risk management, it's supposed to be our trading Bible. Just we will say, oh, there's a candlestick Bible. Risk management, we need to embrace it. You know, it's something that we need to say, you know what? I'm not going to be a risky person. I'm going to play by the rules. Very important. So we have some strategies for managing emotions, which is just basically response to some of those emotional challenges. So develop a trading plan, stick to it. Very important, right? So again, we need to maintain a realistic expectation. This one cannot be emphasized. You are risking 10 pips, but you want to make 100 pips. Well, even though it's good, but you know, it is. You need to also have a very good nerve to withstand the retracement and all those movements in the market. Because the forex market does not just move on a straight line. It doesn't. So again, we can't be emotionally attached to a trade, right? We can't say this trade is for me, except no. Let's just treat that as an object, right? Whether it's a pair, whether it's a trade, it says set up, and say, oh, if it gets to 1940, I must sell. Well, you can get to 1940 and it's not giving you indication to sell. Will you just jump into it? So don't be so fixated. We need to trade with what the market is offering us. So sometimes when, again, even God himself, he says that all of us who have our labor and our body, we should come and seek, get rest, right? So sometimes when there's a lot of stress, let's just retreat. Let's just take a bit of breather. It's not a war. It's not no retreat, no surrender, no. So again, we can, you know, our lot size, our stop loss shouldn't be excessive, right? So that it doesn't mess up with our emotion. Again, let's be consistent with our risk-reward ratio. So for example, if you are doing 1:2, 1:3, let it be standard. So that you don't go and enter a trade because it's 10 pips. You then say you are doing 1:10. Because you feel that 30 pips is too small. But in terms of risk-reward ratio, right? So 30 pips would have been okay for you. So it's important that we note this. So again, as we are in profit, we're moving our stop loss into profit, and we're entering additional position, right? So when you move your stop loss into profit and you enter another position, it's only one risk you are carrying, right? Because the other one, you are trading with the market's money. If it goes back, it will take you out marginal profit, right? It's important that we understand this. So again, we need to learn, right? We need to learn. We need to seek help from our colleagues, from our mentors, from people that also, you will know that they're also trading, right? So that sometimes we just need a bit of information and say, oh, let's do this, let's do that. It's very important. Even in a normal life, sometimes we could be emotionally down. Someone will say, I want to see a counselor. Yeah, the issues of life are just enormous, right? So sometimes, maybe instead of us research, we're doing a lot of research for 1 week, 2 weeks, maybe just one information from somebody will reduce that burden, right? Because why do we want to reinvent the wheel? There are a lot of things that, you know, they're already existing, right? So you can't say, oh, I want to do it. I don't want to make it feel as if it's this person that gave me the idea. No, there's nothing that we are doing, even in our corporate life. And that's why even when somebody is putting up a project or a thesis, it's going to reference a lot of persons, right? So that there's no plagiarism. It would say that according to this person has already done this research. You will go and bring that idea and put it there and say, according to Newton, according to this person, right? So you can't just say, oh, I want to do it such a way that I didn't check any literature. No, that is That is a mindset that will cause somebody a lot of problem. All right. So I think this is the point that we'll end our trading psychology class. But if there's any question from you, let's take it.
Nope, I don't have any questions. Pretty clear cut class. Trading definitely is 90% emotions and 10% skills. So yes, thank you.
Very important. All right, so next Wednesday, we're doing a lot of break of structure, change of character, inducement, that smart money concept. So let's prepare for the class.
Yes. Get
All
to
right.
some nitty-gritty stuff. Good. Have a
All right.
fabulous weekend.
You too. My regards to everyone.
Thank
Bye now.
you.
Bye.
Bye-bye.